Amazing.
Would you like an example of how one of these loans could work in a real life example? Would that help?
Yeah, let's quickly do it. I mean, I'd love to get more details into how these actually work. I mean, I feel like I understand them at a high level, but I'm a numbers guy, so show me the numbers.
Okay, so here is an example of someone who puts in, this is what's known as a single premium policy. Single premium policies are very interesting, very rare bird in the life insurance world. And this guy, in this particular case, he's 40 years old when he starts his policy, and he puts in a very large sum of $400,000. Now, Gabe, please understand, you could take a zero off of that number, and it works just fine. You could add another zero on top of that number, and it works just fine as well. It's all proportional. But this guy had 400 grand. He had pulled it from several syndication deals. So he put that money as a single one-time only premium into a whole life policy, one lump sum. Okay. He has in the very first year, $379,000. And he's able to borrow about 90% of that money for any purpose, any reason. Now, why does he have a cash value of $379,000? Didn't he put in 400 grand? Well, yes, he did. But remember, he was buying life insurance. So this is one of the things to always remember. You're not getting into some sort of a get rich quick scheme here. This is purchasing a long-term contract that you get to keep that gets better and better every year you keep it. So what was the death benefit there in the first year?
Yeah, and I think that's a really good, I'm really glad you mentioned that, Mark, that this is a life insurance policy. The whole point of this is that if you pass away, your family has a certain benefit, you know, and your estate can be taken care of. And that's how it should be viewed at first and foremost. This is a life insurance product.
Absolutely. Yes. And if anyone tries to tell you otherwise, run, don't walk, because they're probably not in compliance and not, if they're saying that incorrectly, what else are they saying that might throw you off? So yes, the death benefit in year
Mark,
one.
sorry, Mark, sorry to interrupt one more time. When you talk about the cash value, is that available right away on day one, or do you have to wait a certain amount of time?
Again, all this depends on if this was designed properly by a bank on yourself professional. Too many people. I have working with someone right now who has $800,000 in cash value across several companies, several policies, and the products are all a mess. You know, he couldn't borrow from it for years. It breaks the compound growth when he does borrow. No, to answer your question, if it's designed properly, the bank on yourself way, you should be able to get the money out within about a week or two of starting your policy. And getting access to the money at any time takes only about 5 to 7 business days. All right.
Amazing.
So in the first year, this guy put in 400 grand. His death benefit was $830,000. So right there, Gabe, we just doubled the gift to the family on day one. But what do you notice about that death benefit as you look at the numbers there, Gabe? What do you notice? Is it shrinking, staying the same?
It's growing. It's growing steadily.
Sufficient, keeping up with inflation and more. And that's a tax-free gift to the family, of course, as life insurance is income tax-free on death benefits. And notice the cash value. It's doing some pretty nice growth as well, right? In fact, by year 3, he's already got a cash value of $415,000. And by year 1, it was $379,000. So to go from $379 to $415 in just 3 years, that sure beats my bank accounts, my savings accounts, my CDs even. And so that's the growth of these policies. And over time, of course, I'm looking at year 15, he's got almost $700,000 in there in cash value and almost $1.2 million death benefit in year 15. Okay, so that's how the policy is going to grow. Whether he borrows from it or not, that's just how it's going to work. There's really nothing he can do to stop that growth, which is so cool. Where was the stock market crash in this year? So in this guy's particular example, like I mentioned, in the first year, within about a month of starting his policy, he borrowed out $360,000 for a multifamily deal. It was a large deal.
Mark, sorry. When did he take out that loan?
Within the first 30 days. It was in the first month of starting this policy. Yep.
Got it.
And he put that money to work in a multifamily deal, which is, in a syndication that he plans to see refinanced, or the full cycle will be complete within 8 years, he thought was more than sufficient. So what we did here was we looked at how the policy will perform. Remember, the policy will continue to grow. Even though he had borrowed all that money out to go put it into the apartment deal, his policy continues to grow as if he had not borrowed the cash out. So by year 8, his cash value is $520,000. Okay, so remember, he put in 400 grand. And his cash in year 8 is $520,000. That represents a $120,000 increase above his contributions. Now, remember, he did borrow from this policy, and they do charge loan interest on these insurance loans. So we have to factor that into the equation here. But this guy in this example, over an 8-year period, would have paid about $54,000 of loan interest. That works out, by the way, Gabe, to a 2.1% APR.
That's amazing.
Not too bad for these days where mortgages are and HELOCs are these days, right?
And I imagine that the rate can be that low because the loan is secured with your life, right?
That's right. Yeah, say some more about that.
So I imagine that if you can't pay that loan back and you unfortunately pass away unexpectedly, then it would just, whatever you owe comes out of your death benefit.
That's right.
So the insurance company doesn't really have a big risk of you not paying back that loan.
It's self-collateralized. And so there's no required repayment plan. There's no forced, hey, you better pay us or we're going to repo your car or something like that. No, they know you're good for it because someday we all graduate from this mortal coil, so to speak. And so they'll just deduct it from our death benefits when you pass away. Now, just to kind of summarize, and then I'll hush on all this. Again, he paid $54,000 of loan interest. Youch, no one likes to pay interest, right? Dave Ramsey would be screaming right now if he saw that we were paying interest on our own money, he would say. And yet, how did this guy fare? Remember, he paid $54,000 in interest, sure, but his growth on that policy was over $120,000. So this means he earned more than he spent. To put it simply, Gabe, if you gave me $54,000 and I gave you back $120,000, how many times would you want to do that deal?
Yeah, exactly. That's phenomenal. That's absolutely phenomenal. And yeah, thanks very much for walking me through it because it makes a lot of sense now. And I think the hard part for me before was like, so you put in, let's say in this example, 400,000, you can take out 360,000, like you said, within, a short amount of time of you starting this, within the first couple of weeks or whatever. But the cash value and the death benefits still keep going.
That's right.
Which is pretty amazing.
That's right. So imagine what this would do to your car purchases. Imagine what this would do for your kids' college. Imagine what this would do, not just for your consumable stuff, but your investments. I mean, why would I pay cash for a real estate project if I could use this instead? Why would I pay cash for any major purchase or expense? What about your tax bill? What about your annual property taxes? What about your kids' college tuition? What about your own retirement needs? The best things I love to see are pictures of people's purchases, their houses that they bought, their boat. I saw a guy one time, he took a picture of his mortgage burning in the back fire pit in his backyard because he had taken a loan from his life insurance to pay off his house mortgage. So these are the people who are one by one breaking free from the banking system. We've been beaten up by those bozos for too long. There's a book out by David Graeber. It's called Debt, the First 5,000 Years. And that the title says it all, Gabe, that, we are in the debtor's world. We're just living in it. We're living in the banker's paradise. We're just their slaves in essence. In fact,